Yo, what's up, everybody? Haven't been live in a long time. I may as well start streaming a lot more to keep everybody up to date. I will give people some time to log in and to watch, and then we will go from there. How's everybody doing today? Hope you're all doing very well. Bitcoin has now hit $44,000, and I don't see any reason why it would even stop before $48,000. I also expect Bitcoin to hit the all-time high again next year, and we're going to talk about why it's going to hit it and how it's going to hit it with ease based off of all metrics in the past and proof in the pudding and history that will be very difficult to argue against what I'm about to say. So we'll give it a little bit more time, let some people log in, and go from there. I'll give it like 2-3 minutes. I'll be back. I'm just gonna go say hi to the wifey. Yo, what's up, everybody? Thank you for joining me. Let's get the show started. So welcome. For those that are new to my channel, my name is Philakone. I've been in the crypto game for about 9 years now. And I've made a significant amount of profit from both the investing side and from the day trading side. I've more so transited to an investor full time now rather than a day trader because of significant stress that day trading causes. I remember looking back in 2017 and 2018, I started to bald. I started to recede tremendously and get white hairs. Then in 2021, it was like the craziest market I've ever seen. I was getting extremely greedy. The stress caught up to me. I lost $100,000 in a single trade on Axis in 30 minutes. And then that's when I realized that, hey man, maybe time to take a step back instead of trading like $1.4 million. So this year I realized that the profits from an investor side is going to highly outweigh the profits from a day trading side because of long-term profits. It's much easier to hold as long as you're following tons of fundamental factors. And I'm going to talk to you guys about some of the factors that I believe is going to lead up into a huge 2024 year for us. So welcome to my channel for those that are new. I know that in 2017, there weren't many YouTubers making YouTube channels. I'm probably one of the original G's that has a YouTube channel. Nowadays, it's saturated with tons of people in the market. I'm not here to compete with them. I'm not here to grow my audience, to get a green screen, to spend tons of time producing and editing videos and finding content. I'm not here to post a 30-minute YouTube video that's taking me 4 hours to make. My time is more valuable than that, but I still believe that the content that I will offer you, if you choose to follow me, it's gonna increase your chances of being hyper successful in this upcoming market. So first of all, I want to talk to you guys about some of the metrics in other years that could have been a deciding factor for you to buy into crypto, okay? So credit to Into the Cryptoverse. There's a lot of macroeconomic charts here and quant charts that's gonna help me decide. So some of my favorite charts that I would like to use when I'm making a decision to buy long-term is the historical risk levels, the fair market value, and also the drawdown from the all-time high. So these three things, when they are combined, also combined with things like hash ribbons, which I'm going to talk to you as well about, and also the presidential election calendar that's coming up in November and December next year. So I'm going to tell you guys why, first of all, it would have been a great time to have bought earlier this year, which is not going to help you, of course. But then I'm also going to talk about why you still have one last opportunity to really get into the crypto game based off of how history has performed before. So let's take a look at the drawdown first of all. So this chart right here is going to show you the drawdown from the all-time high after it has hit it. So I'm going to remove myself somewhere like up here for now. So every time Bitcoin, and the overlay of the white is the price. And this is the drawdown referring to how much it has fallen down from that all-time high level. So just as an example, if the price of Bitcoin was $50,000. Then over time, it fell down to $25,000. The drawdown would be 50%. So if we take a look at, we'll start off after the 2013 bull market. And for those that don't know, the bull markets are divided based off of a 4-year cycle for now because of the Bitcoin halving that's used as an anchor point. And the Bitcoin halving is one of the most significant events that happens in Bitcoin because eventually we're going to reach a limited supply, probably around 2037, 2040, of 21 million Bitcoins, and no more Bitcoins will ever be mined after that. And because of this limited supply compared to traditional monetary fiat right now, there's no inflation. It's a deflationary coin that the money printer can't turn on. You can't just mint new coins. And for those that truly understand why Bitcoin was created from the ashes like a phoenix after the economic crisis in 2008, so the white paper was released by Satoshi Nakamoto in 2009, that was literally giving the middle finger to the federal government. And it's much more transparent. It does not inflate. Everybody can see what's going on in the blockchain, and it's very visible to the public as well. The spending can't be hidden, unlike the government that has secret spending everywhere. They can print on that money printer anytime they need it for anything else. And because of the loss of trust in the government, Bitcoin is something that's fighting. And it's also being adopted by many other countries as well as an actual currency where they can go to Bitcoin and pay for it with Bitcoin, and McDonald's can't refuse them, for example. But I'm not going to get into why it was created too much. So in 2013, Bitcoin reached the first bull market. And what you're going to notice every time here is, for example, here, the all-time high was actually reached around November range. And then the next all-time high, again, was reached around December. And the next all-time high, again, was reached around late November. So what we know is that the Bitcoin halving is always between April and July. And from that time of the Bitcoin halving, there's usually a certain period of days. It's usually around 450 to almost 500 days where we have a mega bull market that reaches the end with an all-time high around the months of November and December. And this is important to understand because the Bitcoin halving event is a very significant event where there is miners capitulation. Miners capitulation, it refers to when the miners are not getting rewarded enough to make up for the cost of actual mining. And there's an indicator called hash ribbons that actually tells you when the miners are being capitulated. And this usually happens slightly before or after the halving event. The small-time miners are not profitable anymore, so we end up getting this type of crossover to the negative side on the hash ribbons, which is a measurement of the hash rate in the mining community. And the mining community, the miners, they're one of the most resilient people in this game. So when we take a look at factors like that, which we'll get into as well, we're going to understand how this miners capitulation ends up occurring. And then after that, the miners, new miners, end up stepping back into the game, which leads, and this is usually in summer, between April and in July. And then what happens is it leads into a mega bull market till the next year, averaging around 470 days or so. And then we lead into the December, and then there's a bear market after that. And then there's the after the bear market year, which is the year that we're in right now, 2019, 2023, 2015. These were all years before the halving year and after the bear market year. So it's always a time of confusion around this year. But this is how the cycle has been trending for literally since the beginning of time, because the Bitcoin halving is anchored in a way so that it leads up to an all-time high after. So now that we've established that, every time we see an all-time high, there is always a massive drawdown that usually lasts somewhere between about 400 days. That's how the cycle has been repeating thus far. So from the all-time high in 2013, in 2017, and in 2021, it's been roughly plus or minus 400 days from the all-time high to reaching a bottom. That's always how it's been so far. So if you take a look at the first all-time high that was reached in November of 2013, it ended up dropping like with the drawdown rate to around the 80% ranges. I think the lowest was like 82 or something like that. And then in 2017, after it reached the all-time high, the drawdown ended up reaching 82%. So we know that every time it's getting close to that 80% range, there's a high chance of it being the actual bottom. Now, this year, it was incredibly different than the previous bear market years where we were expecting a drawdown to the 80% ranges, but it actually only fell down to about 76%. But nevertheless, that was close enough. Now, if I take a look at, for example, the fear and greed index as well with the fair market value. So here's the fear and greed index. This is a measurement of the fear and the greed. Usually when you're getting close to printing a new all-time high in a very bullish market, the greed is going to be significant. And then when the bear market occurs, the fear is going to be extremely significant as well. So if we take a look at over the years when the fear and greed index was first available, this was near when the first drawdown happened in 2018, where it reached that massive low of about an 80% drawdown. Around this time, it was pretty significant to me. Do you guys remember this consolidation that was making the bearish pattern and it was very likely to drop down? It did drop down. And that marked the first 80% where it reached that all-time, the drawdown of 80% with extreme fear. So if you combine fear with the drawdown of around 80%, it would have marked a significant place to buy. And then if you also take a look at the most current year as well, for example, in 20, like just last year, near November and early this year as well, we see that the fear was extremely high combined with that drawdown as well between 75 to 80%. So what we know is that every time there's a drawdown between 75 to 80% plus, and there's extreme fear in the market as well, that's a great time to always buy when there's blood in the streets. And then when you also take a look at the fair market value as well of Bitcoin, where the middle band over here is the fair market value, there's an upper band and a lower band as well, and it's using a basic log formula. Okay, so here it's going to stay, for example, in 2013, leading up to the bull market, we're going to stay well below the fair market value for a fairly consistent period of time, almost equivalent to before the 2017 bull market, almost consistent with how long we've been below the fair market value already. And then eventually we reach between the upper and the lower bands, staying right around the range of the fair market value. And then after that, we end up spiking to the bull market over here. We end up spiking to the bull market in 2017. And then in 2021, we end up spiking and staying above it for a period. If you just take a look right now about how far and how long we've been below it already, it looks like we're heading towards that lower band, eventually into that fair market value. So the best times to buy when you take a look at the fair market value of Bitcoin and the fear and greed index, and from the drawdown alone, just using three basic factors. There's many more metrics that you could use as well. We can say that using these combinations of just these three metrics, it would have been a great time to buy when we're below the fair market value, when there's a lot of fear in the market combined with a huge drawdown of just generally over 70%. So right now we are definitely heading towards this fair market value band right now. And another significant event that is going to help Bitcoin extremely is, of course, the spot ETF filed by BlackRock, where all deadlines are to be met before January the 7th. So you can just imagine if this does get approved, I'm pretty confident, like 80 to 90% sure that, or I'd probably say 70 to 90% sure that Bitcoin spot ETF will eventually get approved. And this is going to give a way for Wall Street to start investing in crypto as well. And I wouldn't be surprised if billions to trillions of dollars ended up pouring into crypto overnight. And this is one of the main reasons why 2023 is different than the 2015 and 2019 year. For example, if we take a look at year to date, actually not that one, monthly returns table, okay? The monthly returns table shows us which months have been green, which months have been red based off of historical years. So in 2015, which is the equivalent year of 2019, which is the equivalent year of the year we're in right now, we can say that in 2015 here, we had 1, 2, 3, 4, 5 bearish months, 7 bullish months. In 2019, same thing. 1, 2, 3, 4. Actually, in 2019, we ended up having 6 bearish months, 6 bullish months. But if you take a look at 2023, it has the characteristics of what we would say is a bullish as F year, right? It doesn't have the characteristics of a consolidation year because we've had literally 9 months that were green and only 3 months that were red so far. And if we take a look at the halving years themselves, which was 2016, 2020, and the next year is 2024, the halving years, we had 1, 2, 3, 4 red months and 8 green months, which is huge. And then in 2020, the same thing as well. We had 4 red months and 8 green months. And if we factor in, for example, the presidential election, which is coming up very soon, it's going to be November the 5th. And you factor in quantitative easing as well, where many experts are predicting that inflation will be curbed and interest rates will lower near the end of next year. So every time there's a presidential election, what you can expect is lots of policies that will support crypto, because right now America is known as somebody that's trying to push away crypto based off of how the SEC, Gary Gensler, is going after these security coins. And they're getting a reputation of how other countries are starting to adopt crypto and they will be left behind. So you can just imagine how many positive cryptocurrency policies will be in place during these elections. So because of that, we can expect the money printer to turn back on. When that happens and interest rates lower significantly, people will have more borrowing power. Businesses will be able to grow. People will be able to buy cars. People will be able to get loans. They'll be able to mortgage houses. So for right now, the interest rate is so high that it's preventing people from spending, which is going to curb the inflation rate if people are spending less and the money printer is not turned on right now. But once that interest rate does lower, combined with the presidential election, combined with the Bitcoin having itself next year as well, quantitative easing, you can just guess why 2023 has been a very powerful year thus far. There's been many factors that are going to lead into 2024 that will make it an extremely bullish year. So let's take a look at some other factors as well. Let's take a look at Bitcoin on the charts itself. So right now, there's nothing that anybody could even say about Bitcoin that's bearish. And of course, there's that possibility of liquidation anytime. But if you take a look at, so this is from CoinGlass, okay, they have a liquidation heat map that I didn't even know about. So this liquidation heat map gives you an estimate of where the majority of big players could be liquidated. So for example, on the upside here, and the stronger of a green color it is, the more of a liquidation presence there is. So if we take a look on the low side, where this green is right here, okay, this green around 33, like the heavy, or sorry, not green, but the yellow, that's where the concentration is. If we end up dropping to this price right here, the longs will get liquidated. A gigantic amount of liquidations will occur. 2.18 billion, apparently, 2.33, around those ranges. And if that happens, the longs get liquidated, they close their positions. And what happens when you close a long, right? You have to sell. So if you sell, it's going to cause a lot of market pressure to the downside, where we can see something like this, for example, okay, over here. So if you take a look right here, okay, I don't know if you can see it, but this is strong and it's yellow. And around this range back then, in August, there was a huge possibility of a liquidation. And when this liquidation price was actually reached, look what ended up happening. A gigantic red to the downside over here. And this is how these cascading waterfall effects occur. Major positions get liquidated, and then they end up going into the side of the capitulation. Whereas right now, there's no shorts that are possibly going to get liquidated because we're now in almost price discovery mode for this particular year before the all-time high. So right now, I think that we're trading mainly based off of the hype of the halving and the federal elections next year being very positive. The spot ETF that is going to gain significant ground and the possibility of money being injected into the market. So that nobody right now in their right mind is in a short position. That's why you're not seeing a strong combination of liquidation prices up here right now. So this is also showing you that there's no shorts in position right now. Nobody is going to short Bitcoin right now. The speculation is huge to drive to the upside. So when you take a look at that and you combine it with the next possible resistance point, which is around $48,000, there's what would stop it from hitting 48K? There's nothing at all. Okay. Earlier, I thought it might hesitate around this range, okay, because we ended up getting a resistance over here, like right there, ended up getting one here, here as well, and slightly in these ranges. But the best way to take a look at resistances is look at the immediate left, okay, the closest resistance with the largest retracement to the upside. So if you take a look at the largest retracement, it would be from down here to up there, where this retraced 46%. Therefore, it would be safe to say that around $48,000, that would be your next target right now. And if you take a look at other indicators, such as the MACD on the daily, if you take a look at the volume as well, it's not slowing down. The volume is consistent throughout the past while. Take a look at the moving average for the volume. In fact, it's increasing. If you take a look at it on the 4-day, you're starting to see the moving average of the volume increasing significantly. You're also starting to see a parabolic effect to the top side here, which is a driving force for Bitcoin. So right now, there's nothing stopping Bitcoin from going to the $48,000 ranges. Now, another thing I wanted to talk about is how Bitcoin is heavily likely to hit that $69,000 price range next year. And I wish I was making this up or this was pure speculation, but it's not speculation in any way at all, okay? So let's take a look at this new chart here. This is the Bitcoin return on investment after the halving, okay? I'm showing you guys a lot of things that I normally don't really talk about, right? Normally you guys just see me as a technical analyst that's day trading, a degenerate day trader, right? But there's a lot of things I just don't like to talk about because it doesn't interest me as much. This side of crypto, the fundamental side, it's really boring to me because it's a lot of reading, it's a lot of watching the news, it's a lot of getting different opinions on Reddit and from experts and then formulating your own opinion and dissecting everything. It's really boring to me. I prefer looking at charts and day trading, which I'll actually be doing a lot more now. So this is the Bitcoin halving, okay? And we're going to talk about how, by the way, like I mentioned, the Bitcoin halving, it always ends up occurring. We're going to take out 2012 though, okay? So the Bitcoin halving, the first one in 2016 happened in July, and in 2020, it happened in May. So between May and July, that's when the Bitcoin halving occurred. Now, if we take a look at how every time there's a Bitcoin halving, the ROI is just ridiculous leading up to the all-time high, okay? When it got to the all-time high in December, in 2016's halving, the ROI was actually 25.47. So this chart is showing you from when the Bitcoin halving began leading up to the all-time high. So what we see is that it actually ended up reaching, like, I can't get my mouse on it, about 30, okay? About 30. So 2016, it reached 30 ROI. Okay, that's ridiculous. And then in 2020's Bitcoin halving, it reached an ROI of about 7.86. So when you think about the price of Bitcoin, every single year there's an halving. There's going to be diminishing returns, meaning that when the price of Bitcoin is like $1 million one day, it's most likely not going to have an ROI of like 4 or 5 anymore, because the market cap will be immense. And for it to do these type of substantial percentage ROI gains, it's incredibly difficult. So this halving as well, I would expect it to do something very significant based off of the halving price. Let's just say it's the current price right now, around 44. And let's just say we factor in some diminishing returns. Even if it was between 2 or 3, that's still like $90,000 to $135,000 to the all-time high. And that's not even a ridiculous speculation and prediction to make. But another prediction we could make is how next year we're going to hit we're going to hit near 69K. So I'm just going into here for, first of all, I'm going to take a look at 2016, okay? So 2016, if you take a look at the ROI from the Bitcoin halving when it began at the beginning of the year to the end of the year, in 2016, the ROI was about 1.5, okay? So it did about 1.5. Just as an example, if Bitcoin was $10,000, it did 50% more. So it finished off at $15,000, okay? Now, the Bitcoin halving in 2020, where is that? In 2020, it finished off with an ROI of 3.38. So 2020 was actually much stronger than in 2016 when it finished the end of the year. So if you just take a look at the ROI of the halving, which was between 1.5 and about, say, 3.5 between 2016 and 2020, even if you just took a number between, for example, 1.5 and 3.5, like if Bitcoin was around $45,000, 1.5 of $45,000 is about $69,000, right? So we're taking a look at $45,000 times 1.5. That is enough on the bare minimum ROI side we're talking about, like the lowest possibility based off of history before. I don't see why it wouldn't hit $69,000. In fact, it has a chance to be even higher than that if we factor in the 2020 ROI of 3.5 from the beginning of the halving year to the end of the year in 2020. So just based off of metrics and halving cycles in the past before off of ROI, it just makes a lot of sense to see a $69,000 hit next year. And also talking about the other metrics before, it seems like there's going to be a huge possibility of some major ROIs in 2024 and 2025. So my best advice I can give to people is this, okay? Is make sure you're researching crypto by the different sectors that are available, and make sure you're heavily diversifying your portfolio. If you don't know how your portfolio is diversified, you might not do nearly as well as someone who's managing their portfolio. Like for example, myself, I'm carrying Bitcoin, Ethereum. I'm heavily invested in layer 1s, layer 2s, gaming, mainly gaming infrastructure. I also like meme coins. I'm going to keep like 3% of my portfolio meme coins, and also AI. So I'm heavily invested in these types of structures. So, and then within those sectors, I'm going to be choosing multiple coins in that sector that I believe have a chance to do very well. On top of that, I mainly invest in blue chip coins. So blue chip coins to me are my favorites because they're reputable. They are established, their team is vetted for, they're vouched, they're highly active, they have lots of big things going on in the community. They're not like a top 500 coin that's still trying to have their footprint in the crypto world. I would rather invest in a blue chip crypto coin and company that has a possibility of a lower ROI than put my money in something like a top 500 coin that has a chance to do a great ROI. Like we're talking about 500 or 1000x, but there's also a chance of that coin going to zero. So because of this, it's very fun and entertaining to put your coin into something like, for example, in 2017, I bought EOS, OmiseGo, IOTA, and XRP. And those coins did like 1,000 to 2,000%. I turned something very, very small into something monstrous. And those coins I was taking a risk with them as well. But never mind, back then they were some of the top players in the in the market cap for on coin market cap. So it's important to diversify between blue chips and also potential coins that are low ranked, low market cap. But you've got to spend a lot of time researching to look for innovation, to look for them doing something that's unique compared to, for example, if it's a current layer 1 coin right now or a layer 2 coin. They have to be unique. You have to try to do your research to prevent the possibility of these CEOs just starting a random crypto coin, having an ICO, holding the majority of them, and then they'll pay influencers to shill it, and then the price ends up spiking up like 2,000%, and then they just dump on their followers, and then they disappear to an island, and the coin was nothing. How many times does that happen? It happens quite often, right? People, you guys ever see the horse? I'm going to show you, okay? White paper. Horse versus reality. I know that everybody has probably seen it before. This one right here, okay? I'm sure you've all seen it. This horse where white paper, production, actual product release. How many times have we seen this happen, right? So you have to do diligence. It's important to do that research, but I would always recommend to keep a small percentage that you are willing to invest in coins that could pop off. For example, myself, 90%, actually 87% of my portfolio is in blue chip coins, like, for example, Algorand, Polkadot, IMX, right? Of course, Bitcoin and Ethereum as well. I've shared my portfolio, exactly the breakdown with the Discord group, so you guys know a lot of the coins that I'm carrying. I'm carrying, I believe, 20 coins right now, like ING, RNDR, Link, ICP, Matic, Optimism, Arbitrum, HBAR, DOT, Algo, ADA, Solano, right? So tons of coins that I'm carrying for the long term. But I'm also allocating 3% for the memes because, well, we've seen the potential of meme coins. Okay, despite inflation, they still have a huge potential. And then I'm allocating 10% to researching into possibly new sectors or the coins that are well below the blue chip range that have a potential to do some astronomical numbers. So that's something that I would always recommend as well. So let's take a look at one last thing before this gets too long, okay? This is an indicator called hash ribbons, and I was talking about that earlier. I do not keep it on because it unfortunately creates like another left side. Actually, no, this is good this time. Yeah, I can't hide it, right? Because if I hide it, it keeps a section down here. So I never keep it on. Let's take this off. So what the hash ribbons is, it's going to show you miner capitulation when they're successful and they're making profit versus near the halving when they're losing money and the small time miners are getting out of the game. So this is a good indication of hash rate versus profit for the miners, that it's going to give you a gauge, okay? And it's also separating here by the halving date as well. So this is one halving date you can see on the bottom here. This is another halving date as well right here. And there's also going to be one that's coming up in April around over here. So what we can see is this, okay? Let's go into it in detail. What we can see is that in 2016, what ended up happening was, so there's two moving averages for hash rate ribbons. There's 60. I have to zoom in a lot to show you guys. There's 60 and there's 30. When the 30 moves below, you can consider that like a death cross, for example. It means that the miners are capitulating and it's not worthwhile for their time to start mining. But eventually, new miners end up coming into the game and it recovers the market slightly after or before the halving, and then it gives you a strong possibility of a buy signal. There's ever only been, I believe, 14 signals in the history of Bitcoin on the weekly chart that has ever indicated for you to buy, and the majority of times when it does give you an indication to buy, it's always like a 100% successful signal, either over a short period of time or a long period of time, okay? So let's take a look at the first halving. I'm not going to zoom into the detail there, but there's different stages where it first shows you the capitulation and then the long period of time where the miners are not profitable. But then it also shows you where the hash ribbon recovers because mining is now profitable again. Okay, so if you take a look at 2016's, first of all, right before the halving, this is when it was. After the halving, there was a major capitulation. Like, we're talking about a huge ass drop, like 25% of a drop. So it wasn't worthwhile there. But eventually, you ended up getting a buy signal in August of 2016. Okay? So in August of 2016, it ends up giving you a strong buy signal. And then you never ended up selling. I'm going to close my chandelier exit indicator. You never ended up selling, right? So it gave you one strong buy signal all the way to over here. But of course, you're not going to ride it to what it tells you again, right? You're going to use other metrics and indicators like chandelier exit indicator. You're also going to use moving averages as well to potentially identify a top. But the point is, right after the halving occurred, a capitulation occurred, and then you had an opportunity. It's sideways for a little bit, and then you have an incredible opportunity to get into crypto long term. And then if you take a look at the next halving, okay, in 2020 over here, what you're going to see is that the capitulation ended up happening before the halving occurred. So the halving was in May of 2020, and there was a major drop that ended up occurring, a 63% drop. So what we've learned is that before or after the halving, something ends up happening with Bitcoin. But more importantly, what always happens with Bitcoin around the halving is miners' capitulation. And then eventually the mining hash rate ends up recovering and it's profitable again. Therefore, after the Bitcoin halving, there's always a period of hash rate mining. And these are directly correlated to how a Bitcoin bull market can begin. So there's a period here of about 2 months of sideways, and then the hash rate recovers, which leads into the gigantic bull market. So the important key takeaway from this is that before the halving occurs and after the halving occurs, there could be a major capitulation. And slightly after the halving, there's a sideways period where the hash rate ends up recovering. And during this period is where a lot of alts will also be accumulated and Bitcoin will be as well. So this is the main punchline. You have till literally maybe April, May, June to buy crypto. That's the latest. Maybe you could buy it slightly before that if there's a capitulation. But the truth is, you don't have much time. And I can go on for it's been 40 minutes already and I haven't even scratched the surface yet of talking about different metrics that are going to lead up into the bull market. So whenever I see comments on Twitter like Bitcoin's going to go to 15,000 or 10,000, I can assure you that I do this. I'm always working in crypto like 8 to 16 hours a day. I'm not an economist by any means. I'm self-taught. I read the news like everybody else, but the amount of time that I put into the market is going to highly exceed the average person, trust me. So I would say that I'm much more informed than the average user out there. And when I say that during the halving period, there could be a major capitulation and then a sideways movement, that is your last and final time to end up buying crypto for the long haul. Because there's usually a period between 450 days to 500 days of a major bull market after the halving that's going to lead to the all-time high and the top. And also, we talked about a lot of things today. So I'll make more of these videos if you guys are interested, okay? But for now, you guys need to prepare, man. I made the emergency bull market survival guide so cheap. It's $199. I carry literally a multi-million-dollar portfolio. I don't need to sell these courses or make them, but the reason I do is because I know it helps people. Not only that, I respect my own time and I value it. Therefore, there must be a price on something to respect yourself. I highly recommend that you pick up this emergency bull market survival guide course. It's highly redone. It's going to show you my 4 powerful strategies that I plan to use to swing to make some immense profits. And if you guys DM me, right now, it's $199. Go through it, see what people are saying. DM me and I will make the pot even sweeter for you. Okay, I will give you a bonus that you're going to be really glad that you got. So DM me for this course. Trust me, guys, I am one of the people that you need to follow. And I will help you be the best that I can. I will help you increase your chances of being successful in this bull market. And people are always like, Phil, why do you sell things? Why do you have a Discord if you're doing so well? Just imagine for a moment I didn't, and I stayed off of social media and I'm just working for myself. I would be bored as fuck. Like, you know how boring that would be, just working for yourself? I have to be involved in the community somehow. I have to make content. I have to interact with people. I have to have my Discord group to ban people sometimes when they annoy me. You know, it's important to be active in the community if you are in the community in a major way. So guys, pick up this course of mine, join the Discord group. You guys are going to get tremendous value out of it. And the closer we get to this bull market, the more active I'm going to be and put out quality content just like this one. So to be honest, I'm too lazy to look at questions because it's been like 41 minutes already, but you're welcome to DM me and I'll get back to you as soon as I can. So if you enjoyed this content, please like and subscribe to it. Make sure you guys are subscribing to me on YouTube. I see a lot of people that are not. Thank you.